Agricultural Commodity Market Outlook 2025-2029. The global agricultural commodity market remains one of the most consequential pillars of the world economy, underpinning food systems, industrial supply chains, and trade flows. In 2024, the market reached an estimated $5.6 trillion, reflecting sustained demand across staple crops, specialty products, and value-added agricultural inputs. Current forecasts project growth to $6.1 trillion in 2025, with the market expected to expand further to $8.9 trillion by 2029, representing a 7.5% compound annual growth rate, (CAGR). While the long-term outlook remains positive, the trajectory is becoming more complex. Structural demand drivers, particularly nutrition, population growth, and bio-based industrial uses, are now intersecting with geopolitical trade pressures, input cost volatility, and climate-driven production risks. What the agricultural commodity market includes. Agricultural commodities are raw or minimally processed products derived from farming and agriculture that serve as foundational inputs for food, feed, textiles, energy, and industrial manufacturing. Core commodity categories include oilseeds and grains, such as soybeans, corn, wheat, and rice. Soft commodities including cocoa, coffee, cotton, and spices. Other agricultural outputs such as sugar, barley, oats, fruits, vegetables, and palm oil. These commodities are traded through both online and offline channels, serving business-to-business (B2B) buyers, such as processors, manufacturers, and exporters, as well as business-to-consumer (B2C) markets. Growth drivers: health, diet, and structural demand. Rising demand for healthier diets continues to be a central growth engine for agricultural commodities. Increased consumer focus on protein intake, whole foods, and dietary transparency has elevated demand for crops such as soybeans, grains, fruits, and specialty produce. These trends are reinforced by growing awareness of chronic disease risks, food security concerns, and access to nutrition-driven food systems. Beyond direct consumption, agricultural commodities are also benefiting from expanding use in biofuels, renewable materials, and animal feed, reinforcing baseline demand even amid economic uncertainty. Trade tensions and the cost of friction. Despite strong demand fundamentals, trade dynamics are introducing measurable headwinds. The projected 7.5% CAR represents a slight downward revision compared to earlier forecasts, largely attributed to escalating tariff pressures between the United States and key trading partners. Tariffs affecting soybeans, corn, wheat, and dairy products have disrupted export flows to major markets such as China and Mexico, increasing the risk of domestic oversupply and price compression. At the same time, tariffs on imported fertilizers, agrochemicals, and farm equipment components have raised production costs, tightening margins for growers. In response, producers are adjusting strategies by diversifying crop portfolios, increasing adoption of precision agriculture to reduce input waste, advocating for policy relief, subsidies, and improved market access. These shifts signal a market adapting tactically rather than retrenching. Market segmentation and regional outlook. By product, the market spans soybeans, corn, wheat, rice, cocoa, coffee, cotton, spices, and a broad category of other agricultural goods. Each major category is further segmented by variety, for example, GMO versus non-GMO soybeans or specialty corn and wheat types, reflecting differentiated demand across food, feed, and industrial applications. North America remained the largest regional market in 2024, supported by high production capacity, advanced farm technologies, and strong export infrastructure. However, Asia-Pacific and South America continue to play critical roles in global supply and demand balance, particularly as population growth and dietary shifts accelerate. Technology and seed innovation as a market signal. One of the most notable trends shaping the market is increased investment in high-yield and high-protein seed varieties, particularly in soybeans. Seed innovation is increasingly positioned as a sustainability lever, supporting higher output per acre, improved resilience to climate variability, and reduced land use pressure. These developments reflect a broader transition toward biotechnology-enabled agriculture, where productivity gains are tied directly to environmental and economic performance. Why this market matters now. The agricultural commodity market is expanding, but not uniformly. Growth is being reshaped by trade policy, input economics, and innovation cycles rather than simple volume increases. For organizations exposed to food systems, bio based manufacturing, energy inputs, or global supply chains, agricultural commodities remain a critical barometer of both economic resilience and systemic risk as the decade progresses. You've been listening to Sustainability Soundbites by Environment and Energy Leader. For partnership opportunities, please reach out to our team.